All right, everyone. A very good evening to all of you. It is 4:10 p.m. and 27th of October 2024. It is. Let's have a look what we have ahead of the week. Uh, I think from an economic data point of view, we have plenty of data. It's going to be a busy week with some yen lower house elections. We are having a jobs job opening, CPI reports coming from Australia, ADP labor data from United States, GDP. We have manufacturing PMIs out of China, Bank of Japan monetary policy decision with outlook report. We are having GDP from Canada, core PCE and employment costs from United States of America. We're gonna have a CPI reports month on month from Swiss franc and NFP major start of the week on Friday with ISM manufacturing PMIs. So we will go all of through this main major economic events in a bit, but before that, I just wanna highlight that we are not gonna have any Fed officials coming out from FOMC. So it is October, as you all know, and date is today 27th. The highlighted till 6th and 7th, the day we are gonna have FOMC. We are not as highlighted on this FOMC trading external communications blackout calendar that we're not going to have Fed officials. So we have some release from that point. Now back to the economic calendar. Let's start with from what we had last week. As always, I mean, I can't emphasize this anymore, that it is very wise and important to go through some major economic events. We have uh, it really helps you to recalibrate and can give you some new thoughts if we just look at the historical data and which clearly can give us some sort of bias on fundamental side. Let's start with Sunday. China LPR rate was announced. 25 basis point was a cut, and we have seen that China PBOC is trying to boost their economy, and they are continuously announcing some sort of a stimulus. And we had some comments on 18th of October from PBOC PAN stating that they are gonna do 25 or 20 basis point of cut in LPR, and they will do more. On back of that, we haven't had seen any move uh, from from equity side. So this is China A50. All right, you have seen it so many times. I know it, but just last time. Okay, so we have seen when the China stimulus announced, it got almost 47% up after that. And with this sort of upside in the equity in very short time period of time, it creates some sort of uncertainties that there can be a reversal. Reversal can be caused by quick profit taking, and also with the more expectations that the PBOC will more implement stimulus in their economy. But what we have seen that after the major stimulus announcement, the market was expecting much more than what they have previously announced, and they have. We can assume that they have failed to convince the market that they are trying to push further their economy. So with that, there was a quick reversal. We have seen almost close to 0.5% Fibonacci retracement. It is what uh, creating a solid resistance over there, currently sitting in between 0.61 and zero point 0.5 resistance level. So back to the last week LPR rate. So we have 25 basis points of cut, and as I have shown that it's just not, market is not buying it. I mean, so it's now, I think it's a matter of time that how the market take this stimulus. So moving forward, Monday, we haven't had any major, as we know, but we do have had some Fed officials coming out, but they did not give us any clue what sort of a policy decision they favor on. Moving forward with, we had Bank of England Governor Bailey. I think he didn't made any comments on monetary policy. Uh, President Lagarde and FOMC Harker, nothing. I think we haven't had any major comments from any official, no matter it's coming from a European side, no matter from coming from Bank of Japan side, FOMC side. It just was nothing burger. So the major event we had was Bank of Canada monetary policy decision. I do have all of the commentary here. Let me just bring that up for you guys. Okay, so here. So Bank of Canada on 23rd of October reduced their policy rate by 50 basis point cuts as expected, 3.7%. So the comment was, if the economy evolves broadly in line with our latest forecast, we expect to reduce the policy rate further. So CPI, the bank preferred measure of core inflation, are now below 2.5%. Gross GDP growth is forecast to strengthen gradually over the projection horizon. And December meeting, 31 basis point of cut was priced in as of 23rd of October. So in the context of statement, they have removed this red highlighted text and added some green. The highlighted green was added. So with this stating, I think that uh, so the comment I was just reading, with inflation now back around 2% target, Governor Council decided to reduce the rate by 50 basis points to support economic growth and keep inflation close to the middle of the 1 to 3%. If the economy will broadly in line with latest forecast, we expect to reduce the policy rate further. However, the timing and pace further reduction in the policy rate will be guided by incoming information and assessment. And the bank committed to maintaining price stability of Canadians by keeping inflation close to the target 2%. And they have also released their CPI 2024 forecast with the GDP forecast. Uh, I think we have had here. So Bank C 2.5%, previously lower than previous 2025, lower 26 lower than, I think same as previous forecast 2.0. The last MPR was released on July 2024. GDP, if we look at 1.2, same. I think there is no change in GDP. There was only change in CPI, and they think that by the end of 2025 they will be at 2.2%. So if we look at the statement, Bank of Canada Macron says data and bank surveys suggest we are back to low inflation. Now our focus is to maintain low stable inflation. So the bank think that inflation is now under control, and they can do some further cuts. So it was this rate decision was highly anticipated, with money market was already pricing in almost 100% for a 50 basis point cut. So that's what they did, and it turned out to be a nothing burger. Very disappointing. So anyway, moving forward, we have had some comments from Bank of England Governor Bailey, and there wasn't anything major. Moving forward, Thursday, flash manufacturing and services PMI out of Europe. We do know that last time from ECB, they were worried about the PMI figure are not doing that great. Uh, so it was somewhere here, I think. Yeah. So Lagarde has mentioned a soft PMI survey 4 or 5 times in a clear indication they are worried about growth. So with that, we were highly focused on PMI's numbers, and this one also comes in mixed bag. Look at the flash manufacturing PMIs below than consensus, services PMI below than street thought, manufacturing services Germany above. So it became pretty much a mixed bag with the manufacturing services, giving us no clue, no clear direction for euro. Uh, Flash manufacturing PMI and service PMI came worse than expected in pound, but recently we have seen a huge strength in a pound. Let me just show you guys the pound geometrical, and you can see that it is really at expensive levels, 113 close to that, and which was seen at September, and if we go all the way back to the July. So I mean, it is really hard to believe that what is the force that driving pound so high. Even though we have had miss in the PMI's reports, there was like no change in sterling. It was really frustrating. The last week was a very tricky and non-tradable week. The environment was so messy that the market wasn't even focusing, I think, on economic events. It was just all over the place. The market is just trying to hedge against the US elections. So, anyway, moving forward, we had flash manufacturing PMIs, services PMIs. Was nothing burger. What a disappointment it was. Bank of England Governor Bailey didn't give us anything new. And Friday, just retail sales, and I didn't even trade it on that day. Just stayed away. What a boring, turned out to be a boring week it was. So let's hope that we get some fantastic volatility or fantastic moves this week, with starting with the lower house elections happening in Japan. So the Japan will conduct a general election on Sunday, as we know, and to elect all 465 members of the House of Representatives, which is the lower house of the Diet. 233 seats are needed to for the majority. Recently, PM Ishiba just snapped earlier elections, which is totally considered as a gamble. Why? Because she called elections so early into the leadership that looks like to have backfired, as nearly all recent polls by Japanese media have suggested that the LDP could lose their majority in parliament. So it's the thing to wait and watch that what sort of a data and what sort of election results we get out of Japan. If I talk about the comments from Ishiba, she had previously pledged in August to roll back abnous stimulus measure, but then seemingly did a U-turn more recently following a meeting with Governor Ueda, whereby he stated that they are not in the environment for an additional hike. So the tradable event we can see that can happen if the other leadership get wins could raise the hurdles for the BoJ to hike risk. Conversely, a shock result in which the CDP come out on top would likely result in a change of government and shift to more hawkish environment. Now, with that, we do know that if the Ishiba gets the majority in lower house, it will not create any sort of a volatility. Any other results than that can create some yen strength, and we will see if that case happens. If that doesn't, it's gonna turn out to be a nothing burger. Now, looking at the Monday, Bank of Canada Governor Macklin is speaking, and this is going to be uh, only one major BOC speaker we are having. So we will look for what sort of information Governor Macklem provides. Other than that, we are having a monetary policy report hearing out of UK, in which the UK budget will announced. Uh, I think Labour Chancellor Reeves will will have a new golden rule as its cornerstone, a rule which says that day-to-day spending must be balanced by tax revenue. But there are some things that she borrows has to be spent on investment given the new golden rule, something which is notably difficult to successfully deploy in the UK. So we will see what sort of budget announcements we get out from UK. Uh, we know that the Fed is highly focused on labor data, but we also know that there is a election going on in US starting from November 5th. So with this US thing and economic data is gonna create a mess. So I think in the environment where we have US election looming around, in the economic data like this will get less attention. So the polls coming out from US will have more power than the economic data over the US dollar. So anyway, if we get a better than expected, obviously I will try to look for a dollar bias, but we can see that the dollar has recently seen a lot of strength in a very short space of time. So uh, if we will see if a short-term scalp can be placed out from this Jol's job opening data. So Aussie CPI quarter of quarter and year of year is something we are looking for. If I just show you guys, it was somewhere here. Yeah. So 3.18% was the last number we got. Anything below than that will create not long term, some sort of a short term, as we understand that Reserve Bank of Australia is now right now pretty much very hawkish, and they said they are not ruling anything in or out. However, in the minutes of September, uh, they were somewhat less hawkish than the prior, but still it will consider a hawkish stance from RBA. So lower than expected CPI will create some sort of a relief to RBA, and we can after that think about some less hawkish commentary from RBA, Reserve Bank of Australia. This is something to keep an eye on. Uh, Moving forward, ADP and GDP is gonna be the numbers which gonna stay on the radar. Labor data, as I said, most important key factors in US economy. GDP numbers is also gonna play some major roles here. China manufacturing PMIs. So we understand that China is trying so hard to put their economy and reach at a 5% GDP goal, which seems far from the current situation, but any good number will create some optimism in Chinese economy, and we can see uh, currencies like New Zealand and Aussie will can get benefit because the New Australia has a 37% and the New Zealand I think had 23% export relations with China. So what happens in China has a highly influence on antibodians. Bank of Japan policy rate we have, it is expected that the bank will stay at no change policy. They will also release their latest outlook report with board members a median forecast for real GDP and core CPI. With the current comments, official suggesting that rate hikes are likely to continue rising, but with a lack of urgency for an immediate hikes. We had some comments from Bank of Japan. They said they're increasingly aware that there is little need to rush into further interest rate hike at this monthly meeting amid uncertainty surrounding the outlook for overseas economics, financial markets, but won't rule it out in the future. So uh, they released their Bank of Japan policy rates around 11 or 12 Atlantic Standard Time in the midnight. So we will see what we get from this data. So other than that, I think unemployment claims and employment index gonna be the major one out of these GDP or core PCE from Canada and US. And lastly, on Friday, NFP start of the week. Full eyes on this data. Anything better than expected can create a huge volatility.